In this video, I'm going to show you a trading strategy that works so good, I just have to tell you guys. And it involves using Bollinger Bands and RSI. It's simple, easy to use, and has a pretty high success rate if you use it correctly. The first step for this strategy is setting up Bollinger Bands. If you never used Bollinger Bands before, you are lucky you clicked this video because this indicator is absolutely amazing and it's a great way to find support and resistance levels. Now, the default setting give you are nice, but we want to change them for this specific strategy. First thing you want to do is go to the length section and change this value to 30. Make sure the standard deviation is set to 2. Alright, we got the Bollinger Bands set up. Now, let's add the RSI. Now that we have RSI added, let's modify the settings a bit. The default parameter 14, we make it change into 13 for this strategy. If you haven't used RSI before, it's a great indicator to tell you if a certain situation is being overbought or oversold. If the line is above the 70 value, it is overbought. If the line is below the 30 value, it is oversold. Now it's time to pair these two indicators together and get some profitable trades going. Make sure you watch till the end for this video because I'm going to explain amazing tips to make you understand how this strategy working. So there are two different strategies you can choose from when using these indicators. Both of these strategies are built around the concept. What's mean reversion, you may ask? Well, mean refers to the word average. Reversion means returning to, so to put it simply, the phrase mean reversion just means returning to the average, which is exactly what we are going to be shooting for with this strategy. So as an example, in most cases, if there is extreme price movement in one direction, whether it's up or down, we can predict after that big price movement, the price will return back to the average, the moving average right here. So if the price goes above the upper Bollinger Band, we want to enter a short trade. If the price goes below the bottom Bollinger Band, we want to enter a long trade. Simple enough, right? Well, if you did this by itself, it cannot work good. That's why we added the RSI. So now you can see in this example, the price went above or below the Bollinger Bands many times, giving lots of false signals. So if you went in every time here, you probably lost money. To solve this issue, we are going to add one more requirement. You can only go in if the RSI hits an extreme value, meaning we can only enter a long trade if the price moves below the lower Bollinger Band and the RSI goes below 25. For short selling, we will only enter a trade if the price goes above the upper Bollinger Band and the RSI goes over the value of 75. So as an example here, we are looking at Apple and the price starts going below the bottom Bollinger Band here. But at this point in time, the RSI is still not where we want it to be. So we wait it out a bit until the line goes below 25, which it proceeds to go down all the way to 20. We enter a long trade at this point, and the price returns to the average just like we predicted it would. Now, there is some crucial information you need to know about this strategy, or else it simply just won't work. These next tips I'm about to tell you is the difference between making this strategy profitable or making a money loser. Where this strategy has its fault is when the market is moving sideways. For almost all trading strategies, when the market is moving sideways, it's a lot harder to predict. So as example here, the price goes below the lower Bollinger Band and the RSI is below 25. But the price just keeps on dropping. So if you enter here, you would have an absolute massive loss. So now I'm going to show you a nice little trick so you know beforehand before this huge price movement even happened. So in this example, notice how skinny the Bollinger Band are at this point in time. They are very close together and there is barely any price movement and the market is moving sideways. You can also see that the RSI is being very tame and staying in between the purple rectangle and not going above or below the major points we made before. This alone should immediately raise a huge red flag. Most times when the market is like this for a while, when the price does break in a certain direction, it goes in that direction with huge amounts of momentum. So in these types of example, you never want to trade trying to catch a falling knife when the price starts to act like this. Let me show you another strategy we can use to help solve this problem that works like absolute magic. Here you can see the price start to drop to the lower Bollinger Band and then reverse. The next time it comes down, it makes a new lower from the previous low. But something interesting is happening. The RSI made a higher lower. So we have price making a lower low. But the RSI is making higher low. This right here is called divergence and is an absolute great sign to enter a trade, especially if RSI was previously below 25 and the price went below the lower Bollinger Band. If this happens, there is an extremely great chance the price will reverse and make a new higher high. In this video, I just show you how to pair Bollinger Bands with RSI and make it a profitable trading strategy. Now you can take 2 seconds to like this video, and if you like my sharing, you can subscribe this YouTube channel, then you won't miss out any strategy sharing by me. I'm Angie. Wish to see you again in my next video. Bye bye.